Although the dollar extended losses yesterday, oil prices continue to stand still. Apparently, this is partly due to the fact that oil has already gained a strong upside momentum, rising to almost $100 per barrel. Nevertheless, the results of the US midterm elections are still of great importance to the energy market. After all, Republicans in the US Congress do not support the release of oil from strategic reserves, and if the Republican Party captures a majority in November's midterm elections, the country may face real oil shortages in the near future. Against this background, oil prices will have a chance of breaking above $100 per barrel and even heading towards the level of $110. From a technical point of view, Brent crude oil futures are pulling back from the psychological level of $100 per barrel. The crude has already slid by about 2%. To resume its bullish run, Brent crude needs to consolidate at least above the control level of 100, and the next buy signal will be generated when the crude stays firm above the 101.50 mark. Alternatively, the benchmark is likely to extend losses if the crude fixes below 96.50 on the forward chart, and in this case a local pullback may lead to a shift in the market sentiment. Likewise, gold seems to be standing still. Investors are also turning their focus to Tuesday's midterm elections in the United States. At the same time, market participants believe that a Republican victory will lead to greater risks and a flight into various safe haven assets, including gold. However, the metals rally is likely to be limited and, most importantly, short-lived. After all, further interest rate hikes by major central banks are still exerting pressure on the precious metal. This will force investors to flee from the gold to the debt market. Therefore, the medium-term outlook for the yellow metal remains gloomy. According to the 1-hour trading chart, gold futures have formed a range between the levels of $1,665 and $1,682, and this accumulation process may spark an increase in the speculators' bets. And in this situation, the best tactic is to trade with a view to breaking through one or another boundary of the range, $1,665 and $1,682. This strategy will help determine the mood among traders. Speaking of the Russian currency, it may well benefit from a potential Republican victory. If Republicans win a majority in the US Congress, the White House initiatives will have to go through a very long-lasting approval process. As the result, they may be changed. This also refers to these measures targeting Russia, and this is rather a positive factor for the Russian economy, so the dollar may well dip even below 60 rubles. Yesterday, the greenback lost about 1.7% against the ruble. As a result, the crude returned to the lower boundary of the previously formed range, limited by the levels of 60.80 and 62.00. Based on the price fluctuations, the situation is uncertain. That's why the dollar-ruble pair may remain range-bound in anticipation of the results of the US midterm elections. And that's all for now. We wish you profitable deals. See you in our channel with a new video in a couple of hours.